Good afternoon, and welcome to the third and final APS NZ Tax Clinic in this series. I'm Rob Anderson, and with me is the product manager, Nigel Babington. Almost all of the issues that arose from the August release have now been addressed and resolved. So Nigel's going to do a recap on the terminal tax calculation, how it shows up in the ledger and how it shows up in the reports. And he's also going to be covering where we are regarding hot fixes and version numbers. We're planning in the new year to run bi-monthly webinars to discuss any ongoing issues, but predominantly we're intending to use this as an opportunity to update everyone on the progress of new developments and share some of the ideas moving forward. So during today's webinar, you can type questions into the question box, which is down the bottom right-hand side. If we get time, we'll address some of them. Otherwise, we will reply by email, and a recording of the webinar will be sent to you in the next couple of days. Okay, good afternoon, Nigel.
Yeah, thanks for that, Rob, and welcome everyone. This third clinic will probably be mostly just recapping what we covered in the second clinic and just going into a little bit more detail and just explaining again the changes for those who found them a little confusing. So just to recap, the terminal tax due calculation was a significant change that occurred in the August release. That action occurs when you're doing the synchronization from the return, updating the ledger, and it's the terminal tax, or what we're now calling the net tax due transaction, that is being calculated, that is slightly different from how it used to be previously. So previously it was literally just RIT less the sum of the offsets or payments against provisional installments. But now we've amended that to use the RIT less the sum of the actual provisional installment due amounts. Now in many cases where either there aren't any installments due and there are no provisional payments, or provisional installments have been fully paid, the net effect is the same. But obviously in some cases where either provisional installments didn't need to be paid or have not been completely paid, then the new calculation is subtly different. So using the example at the top of the page there, in the top right there, we've got a 324241 residual income tax figure, and provisional tax has been partially paid, and there's a RIT figure. So how this manifests itself in the new August release. So on the left-hand side, we're showing the calculations as they used to be prior to August. So in the example where we have the RIT figure less the prov payments, and then that refund or tax to pay figure of 1509.41 with the little orange arrow beside it at the top right. What that would have done in the previous release, we would have effectively taken the discounted or ignored the provisional installments or any due balances. In this example is an 867 balance in the third provisional installment. We would have just simply ignored that and just taken the tax to pay refund figure and calculated a transaction value for that amount. What that would have had the effect of doing, though, is that in terms of the ledger as a whole, it meant that the 867 balance was effectively a misbalance in terms of the totals of all of these transactions. We sort of these values, the total due amount and the total remaining balance, became meaningless in this scenario. With the August release, we're effectively now working on the ledger as a whole. So by when we calculate the final net tax figure, we're taking into account the provisional installment due amounts. So in this case, we've got the 324241 less the sum of these three installments, and that gives us a net value of 642.41, which is the transaction value that we create as the calculation. This has the effect of the total of all of the three provisional installments and the net tax figure equaling RIT. And similarly, when we look at the balance running down, because there was an outstanding balance against the third provisional, that added to the now net tax figure gives us the remaining outstanding balance. One thing just to note here, but there has been a bit of confusion around this net calculation, and that is generally being where you're using the ledger tab in Tax Manager, and the default selection when you come into the ledger tab is the period view, and in that view you are really just only seeing the net tax value for the tax year you're interested in, 2019 in this case, and all of the other transactions, the provisional instalments after the 2020 tax year. One of the suggestions or possible enhancements we could make would be to default that to the 2019 tax year, which would reduce the confusion when that ledger tab is initially loaded. Would be interested in getting your feedback through the emails that come after the session for that. All right, I can hear Rob tapping away in the background, but we'll get through it. Okay, so if we look at the
That's
now
not
from
me, I'm on silent.
Oh, really? Oh dear, must be something else going on. Okay, in the ledger page context, what we're seeing is those same transactions, but now in a more detailed format. So in this case, we had the two payments that had been made. So in prior to August, you would have had writ less these payments, calculating the 1509.91.41 due. But as we're seeing now, basically we are getting the 3242.41 and the due amounts and the new net tax to pay figure equaling that, and the 1509.41, rather than being the due amount transaction, is the running balance for the ledger. So just give you a quick moment to think about that. So again, the difference is that because there was an outstanding balance after the provisional instalments, because the third provisional instalment hadn't been paid at this time, that's the change between the calculations as they would have been and as they now are. Okay, so when the August release first came out, there were some discrepancies or some issues with the payment schedule and the tax summary report. On top of the actual changes that we'd applied, there were a couple of bugs that we have now resolved. This still means there are changes, though, that people need to become familiar with. So on the left, again, we've got the way that the payment schedule section would have appeared prior to August. And in this case, again, the residual income tax figure has been calculated. Provisional tax that had been paid as at the time the return was completed is recorded in the tax return, and the calculated tax to pay figure comes through. But in terms of the payment schedule, the residual income tax figure was effectively ignored. What we ended up with was literally just the final figure and any payments or offsets that were made in the terminal tax account. And in most cases, the due balance and the amount due would have been the same. With the August release, we're now effectively making this a year summary figure in terms of the 2019 net tax refund line, with the calculated amount due being writ. The payments and transfers collectively being the value that's showing up under the provisional tax paid, and the balance due being the calculated tax to pay.
So can I just ask you, Nigel, we've had some requests for the payments and transfers to be merged as one figure. What were your thoughts on that?
Yeah, again, we'd be interested to get people's feedback. There has been the suggestion that it becomes a little confusing if there are a number of different transfers or other payments that have been made against the provisional instalments during the year, and that the figures may be a little hard to explain to the clients when you're reviewing this report. So there is an option, potentially we could look at merging this payment and transfers and just make it effectively an offsets total. So again, we'd be interested to get your feedback on whether that's something you'd like to see. Okay, so just moving on. So now we're moving on to just the next stage after the return's been lodged. And in this case, a payment has been received after the return had been lodged and in fact the 901 letter had been prepared and sent out. This transaction has now come through, and the net effect is we end up with a zero balance for the provisional instalments. It doesn't affect the tax to pay figure, that still remains as it was, the net figure, where we effectively, the highlighted green boxes surround the three provisional instalments as they were due, and the adjusting entry, which collectively means these add up to writ. Now the return has been lodged, and the residual income tax figure that would have been submitted with the tax return effectively affects or directs IRD's assessment. So in this case, an assessment has now been generated. These are the TDS transactions that have come through from IRD. So we have the assessment transaction with the RIT figure coming through here. And in this scenario, we're assuming, because it's over the 2,500 threshold, that in this case they weren't required to pay provisional tax from uplift from the prior years. So in this case, it is a valid return due figure. And in this case, it has generated reassessments of the earlier provisional instalments to zero. Again, these collectively equal the same values as these collective transactions. Again, looking at the running balance, it is as it was before. At this stage, we haven't done any of the matching, and we'll just move on to showing how that appears in the next slide. Okay, so here we are in the next slide. So in this case, we've matched each of the provisional assessments, which were reassessments of zero, against the existing voluntary instalments. So in this case, variances are being generated. When the P1 assessment was matched, it generated an assessment variance to make the two equal collectively zero, which was the IRD reassessment value. And the same has occurred for each of the other provisional instalments. In this case, by matching them against their individual provisional instalments and placing the variance with the instalment, as we move through, we get a ledger running total incrementing up for the effectively overpayment for the overstatement of the instalments compared to what the reassessment has now generated. So we end up with an overpayment effectively, or a balance, running balance of the provisional instalments of 2,600 credit. And one of the enhancements that were made with the August release was that as any of these assessments are recalculated, or any variances associated with one of these provisional instalments, the net tax to pay calc figure is recalculated if the return has been synchronized or locked. And the purpose of this recalculation is to always keep the collective total of all these transactions equaling RIT. So in this scenario, we can see that because the three provisional instalments have been zeroed, the final net tax to pay figure ends up equaling RIT. If there was a variance where we ended up with a balance for those provisional instalments, this net tax to pay calculation figure would just be the difference between the total of those and RIT. So again, we can see in this scenario, the final running balance, regardless of the matching and so on, still equals the 642.41 balance that we had previously. Now, the other consequence of the change in calculation and the fact that we have an outstanding balance that we need to manage was in the 901 application. So with the August release, the terminal, when you were doing a 901 letter for terminal tax, we made a change to include the outstanding balance from provisional instalments. So in this case, in this scenario where I'm showing here, there would have been a provisional outstanding value of 2,600, and that has been included or pulled across into the provisional outstanding value to sit alongside the terminal due amount to give a net figure, which is that 642.41. In this example here, that 3242.41 is residual income tax figure, as we can see here. And then the net credits balance for all of the provisional instalments is included here and generates through. Now, prior to some of the most recent TDS deployed updates, the effect in the 901 letter itself was that we ended up with two values showing up. The provisional outstanding value came through, and then effectively the balance of just the terminal tax account on its own. that then cascaded down into the remittance section of the 901 letter, and was a little hard to explain to clients, and I think everyone agreed was not the way we wanted the output to be. In the 901 app, there's a function, as I've quickly explained again, and most of you will be familiar with this function, to include an outstanding provisional amount into the current prov amount. So this is the effect after that has been applied. There will normally be a little icon sitting in the prov outstanding row. That is, when you right click on the row, gives you the option to include the prov amount and bring it across, and that then updates the total tax payable due to be the total of these two values. To be able to do that in a bulk fashion, where it'll be fairly common now to have a number of transactions that need to have that provisional outstanding value brought across, there is a subsetting which we can refer you to in upcoming emails. But if you check in your menu bar, in your ribbon, if this icon is not visible, then that is a subspaced function that hasn't been switched on. If it is available, then it'll let you update all of the provisional outstandings for all your rows and bring them all through to be available for the 901 letter. With the change that went out on the Guide Walks on 5th of November, the change that was deployed meant that when you generate your 901 letters, effectively the total of your provisional amount and your terminal amount, which is pushed through into this income total payable due amount, that value is now being reported as a single row. So what would have previously been two rows is now merged together into a single total, and also into the remittance section you get the total 642.41 rather than having those two values split. There has been some feedback around where variances for provisional instalments should be placed. With the way that the ledger balance-based summing up of values in the 901 application works now, it doesn't really matter where you put your variances. It's more around how you want to report those for things like your tax summaries and so on. In this case, we're showing that the variances to bring the instalments back to zero have been applied against the terminal tax. So when you're doing the matching of your ledger transactions, your TDS transactions, the variance that is suggested that when you go to create that, by default, the ledger account that it will place that transaction in is defaulted to the same account of the transaction that you've chosen. But you can edit that and change that to any of the other ledger accounts. As I say, the net effect is still the same balance. It just means that you can, in some cases where the instalments are zeroed out, you can effectively get potentially a net zero balance for your provisional instalments. Again, this is less of an issue now that we have made the change in the 901 letters. But for those of you who do prefer to see the transactions outside of the provisional instalments and effectively run balances that match what was asked to be paid rather than what IRD reassessed those values to be, you have that option of placing the variances against the net tax account. Again, everyone will now be familiar with this, but with the change that went through early in November, we made changes to the way that the underlying query that feeds the payment schedule section of the tax summary report was working. So we now have the tax credit row split out from the net tax row. So there are two sort of scenarios that need to be catered for. So where there is actually tax to pay, and in this case we have a a credit that is then being transferred to offset or reduce the net tax to pay. The transfers are seen like this. So the net effect against for the donation tax credits is 0, and what was the refund or tax credit has been transferred against the income return to reduce the due amount. Now, in the other scenario where there is already a refund calculated in the individual's return, we currently generate what we call an assumed ID transaction, an assumed ID payment by IRD. So that value appears under the payments column, but as a debit value, because it's effectively an assumed payment from IRD to the taxpayer rather than a credit value, which would be representing a payment to IRD. So as we made clear in the earlier workshops, we were able to deploy some of these fixes to the tax schedule section of the tax summary report and to the 901 application via the TDS service. So if you're in your central menu and you go into the About Advance and I open that up, the NZ tax version will have been updated to 9.4248. The original August release installed with the version control that went to 9.4238, and it's with the subsequent TDS deployed updates that version has been incremented. For those of you who haven't yet deployed the August release, then those changes won't have been applied, and your version number will be somewhere in the 9.423 range, indicating that you haven't yet installed the August release. For those of you who haven't yet done so, again, our recommendation with the changes that to the part of the updates that the TDS service deployed were some recalculations of the terminal tax figures to correct some earlier errors that had been part of the original August release. And with those fixes, we recommend that you recast your 901 list. So that means deleting the existing list, highlighting all of the rows and deleting those and recreating a new list for your terminal due date. Any existing approved 901s are not deleted, even though they may well be chosen in the bulk selection of all rows. And for those that are deleted, if you have created notes, those notes are not deleted, they are retained. So when the new list appears, those notes will reappear and be accessible. So there has been ongoing work and other small bugs that have been identified with the August release, and there is a hotfix download available. Knowledge article KA01342. Again, most of you will have bookmarked that URL so that you can check on the status of that page. It was last updated on the 5th of November with the same changes that were deployed via the TDS service. So that was around some of the what would have otherwise been version control steps were deployed through the TDS service. But in order to actually take on changes to the software itself, the download would need to be downloaded, and the content of the DLL files and the exe file would need to be copied into your ADV 2000 folder, and the APS deployed as required, whether you're on a Citrix or desktop environment. Again, this includes a version control which takes the SQL database up to the same version that the TDS service has applied, so you would be upgraded to 9.4248. One of the useful changes or fixes that are available with the hotfix is that in return validation, when you're prior to locking your returns in Tax Manager, there are in some cases a provisional instalment type is appearing blank, and the calculations as a result of that are not always as they should be. This is resolved with the hotfix files being copied into your ADV 2000 folder. So you can go ahead and do that pretty much immediately or any time. But just for your information, we have another hotfix coming in the next few days. There has been an identified bug in the ledger balances area regarding the email template. So with the August release, we made changes to that functionality to allow you to put a date ahead of today's date, which used to be the defaulted date on which the balances were calculated. The email template had a couple of faults in that, which have now been resolved. But that is not something we can deploy through the TDS service. It requires a new component, so there will be an additional file and also a version control, which will take you beyond 9.4248 to apply that fix.
So if practices haven't put the August release on yet, would you recommend holding off for that final one?
Yes, it probably is worth it, rather than having to go through and do the exercise multiple times, just doing it as a single process. So yeah, it'll be a case of ideally by the end of the week, or certainly early next week at the outside, we'll have that hotfix available. And if you check the K knowledge article, we'll have updated this last updated date in there when the hotfix has been updated. And we'll send out notification to all of you through Basecamp or on when that is available. So that's really all we wanted to cover today. As I say, all of the critical issues that were identified with the August release regarding the way that the tax schedule was being produced and the splitting of values in the 901 letters, those have now been resolved. A couple of small issues are available through the hotfix files for download. And again, on that knowledge article page, you can there's information on each of the individual fixes that are resolved or addressed with those hotfix files. If you do have any other issues, or if you are still feel like you're encountering some problems with the ledger, we would really like to see and have that information. So as is highlighted here, if you could send us a screenshot images of the tax console ledger page with all of the transactions shown. So sometimes for those of you with custom layouts, you just need to choose the ledger page so that you can get the entire ledger page filling your console, so that you can see all of the transactions that belong to that particular tax year that may affect the, might help us with investigating that issue. Also, if there's any problems with the tax summary report, we'd like to know about those. So as far as we are aware, we have resolved those, but if you are still encountering any issues, we would like to get an example of that. If you're going to email us, if you could begin the subject line with APS NZ Tax Clinic 3 and send that through to support@reckon.com.
Okay, I don't know whether we've, this is something that we might like to put as well in Basecamp Nice, but I had a question saying, has there been a decision on how to get the correct ledger figures when the 2019 PROVs have not been paid yet, as will be paid through TMNZ?
I guess we need to understand what they mean by the correct figures. Again, the theory is basically is that I'd need to see what those examples are. In theory, when ID assess, when the return has been completed and lodged and a reassessment comes through, as I say, you have the option as to whether or not you match those transactions and create variances. In terms of the TMNZ payments, those shouldn't actually affect the assessment values that actually are coming through. Again, it'd be good to see some examples of what you're specifically referring to there.
Okay, so maybe Rebecca.
I'm wondering there if, obviously there is a time lag between when the payments come through from TMNZ. So one way would be to include a ledger transaction that effectively will match against the figure that comes through from IRD, but it can at least be flagged as an expected payment from TMNZ.
Sure, that would be an
Okay.
option, but that again wouldn't affect the actual assessment due values, but it would affect, yeah, it would let you know that in theory a payment is expected or has been ordered through TMNZ. I guess the one thing, just to caveat on that though, depending on the number of days between the transaction that is created, if it's a payment transaction or an assumed payment transaction, and the TMNZ TDS transaction actually coming through, if there's a number of days difference between those two transactions, then the auto matching function may not detect that as a match.
So generally TMNZ transactions come through on the due date. So if it's a 28th of August payment, it will come through as a credit dated the 28th of August. But yeah, just something to review.
Yep. Okay, thanks. That was Andrea. I'm sure if anyone didn't realise this.
Up from the background, yeah.
Excellent. So Nigel, we've had another question, probably just to recap. I think you talked about it before. How do we get the button under actions on the 901 processing? So that'll be the update all.
Right, let me just, okay, I'll just quickly show you where that is. So in system admin, under the system settings, there is the correspondence NZ tax. And there is a setting, update all provs. So that needs to be set to true. And when that's set to true, then that button will appear. So that's under the correspondence NZ tax section of the system section of user subs settings.
Okay, excellent. We've gone 1 minute over, but just wanted to ask you very quickly again what you mentioned at conference about the January release.
Sure. So there is a huge amount of work that we are working on to change the way the integration with IID works in as we move towards retiring eFile during 2020. So we've made the decision not to do an official January release in terms of a software update. We will still be providing a version control file which will enable you to, will update the SQL database, enabling you to roll over and create your 2020 returns and 2021 provisional installments for those of you who want to do that prior to April.
Okay, excellent. All right, well, thank you very much everyone who's joined us for all 3 of these tax clinics. I hope they've been useful for you. Please do send any questions, like Nigel said, to support@reckon.com with the email subject line. And we look forward to catching up with everyone at some point in the future. Thank you.